Hi, I'm Jonathan Swift, and welcome to the third episode of the Insurance COVID-cast, brought to you in association with Insurance Post and Insurance Age. And today we're looking at a topic which has very much been getting headlines recently. One of the impacts of the coronavirus is obviously less traffic on our roads, as we're told only to make the most necessary of journeys, and a lot of these are very short. Now, this has led obviously to less accidents on the road, but also people to start question that car that's lying dormant on their drive. Why are they paying so much for their fully comprehensive insurance? So, and I'll come to you first of all, Freddie. In terms of the incumbent motor insurers, I mean, how do you think their stance is going down with the general public at the moment in terms of the insurance that they're paying for?
I think we've been pretty clear on this. The insurers should be giving some sort of discount back to customers. They should be up to potentially 50%, or they should be allowing people to cancel their insurance for free and use services that are more flexible insurance to use their car while they're not being driven. The insurers at the moment are facing this massive windfall. We've calculated that as about £1 billion over a 3-month lockdown period if their claims are down by about 50%, which is what most of them or a lot of them have reported. And I think it's fundamentally unfair to customers to keep them sort of trapped in this cycle. On the one hand, they're legally obliged to insure their car, and on the other hand, they're not legally able to drive their car other than for one-off essential journeys. In terms of how it's going down with customers, I think customers are just looking for a bit of flexibility at a time when there's a huge amount of pressure on personal finances.
James, what's the BIMAR's view on this?
I think we would agree with Freddy and Cuvva on their stance on this. So we know that when people buy an annual car insurance policy today, it doesn't really matter how many miles they drive. They could drive 0 or they could drive 100,000 miles, and they pay the same price effectively. And so we know that is fundamentally unfair. And I think what we're seeing through the situation at the moment is customers who are being asked by the government to stay at home, who are abiding by what they've been asked to do, and suddenly realizing that their car insurance isn't actually fair because, as Freddie said, at a time when they need flexibility in their pricing and when every penny counts, they're hearing nothing back from their car insurers on this. In stark contrast, I should say, to insurers in the rest of the world, like in the US.
Yeah, I think we'll come to that in a minute, actually. And Andrew, in terms of carrot, do you echo both the points of Freddie and James on this?
Yeah, I mean, whilst we are not a direct comparison with Cuvva nor Buy Miles, we are a business that allows the customer to approximate their annual mileage, and then if they overshoot that, they can buy top-up miles, which are fairly priced based on their driver behaviour score. And we're certainly seeing a reduction in the average miles travelled per customer. You know, we've got 56% of our customer base that are just not using their cars at all on any given day. And the rest they've gone from doing maybe an average 14 miles per day to 4. So, you know, despite what the middle-aged generation might think, of which I count myself as one, it's not all the kids on the roads driving around and acting irresponsibly. You know, they are leaving their cars parked firmly at home. And in fact, we recently ran an incentive to try and encourage them to do exactly that. There's no doubt insurers in the UK are under pressure. They're seeing what's happening in the US, and they're having to respond, and I think we will see some rebate of premium, but I think the disappointment will be under duress and as a consequence of pressure rather than out of a proactive act. And I think the diminished goodwill therefore almost negates the benefit of it from an insurer's perspective. Too little, too late, possibly.
Yeah, because I mean, as James mentioned, I mean, Allstate are one of the most, I suppose, famous or biggest names to do a rebate in the States. I was going to come to a point about whether you thought the UK insurers would do it, and whether you think we'll probably just get a commitment to a rebate rather than any kind of idea about what it will be. And like you've already mentioned, probably the biggest concern for the wider industry is it does seem to have come under duress, and they haven't been proactive on this.
So I think what's happened in the States is where they have a really, really tight regulatory regime, is that they've preempted being forced to rebate premium by the government, and they've done it at a much lower level than they would have otherwise had to. I think the Allstate rebate was about $50, when in fact the saving for the insurers is probably 10 times that.
Yeah, I think that was a smart move probably by Allstate to get ahead of customer opinion on this and act before they were forced to, as Freddie said. In California, I know the regulator has actually taken some proactive steps to force insurers to rebate this premium, and I think sadly that's probably the situation we'll see in the UK. In other words, if the regulator doesn't actually do anything, I don't think the insurers will. I mean, we saw Hastings Direct come out this morning and say that they're paying their dividend to their shareholders, regardless of what the Bank of England has asked insurers to do, and so that kind of gives you an idea of where or like what the attitude of insurers is at the moment.
I think I'm going to sound distinctly at risk of defending the incumbents here, which I suppose I am mildly. I guess what is true is that we don't know how long this will last. We don't know what behaviours will look like following this. Now, I think it's totally fair to assume, and that's why I fully believe in the business model that Cuvva and Buy Miles operate. And in fact, in other parts of our business, we support similar types of proposition in the American market that are mileage based. But how will people behave following this? If I take my 17-year-old son as a case study of one, he passed his test 2 weeks before the curfew, and he's quite canny, and he said that actually what this means is I'm saving my miles now, which means that when the curfew is lifted, I'll be able to drive even more. So he will probably still use the same amount of miles that he declared, but they'll be delivered in a non-linear fashion. And what we might see is a spike in claims as people return to the roads. It's also fair to assume that fewer people will be driving as much as they're used to because more people will work from home. Now, that is almost certainly going to be true in certain pockets of society, but what might also be true is that people will be very reluctant to get back on mass transit systems, to get back on the tube and onto the trains, and may indeed, for those that still are office-based, start to drive their car to work rather, more than they have perhaps in the past. There are so many things about this situation that are unpredictable, but what is absolutely certain is that people could do with a bit of a leg up at the moment in all aspects of their personal finances, and the insurance industry has been a little bit backwards at coming forward in playing its part in that. I think that is absolutely fair to say.
And do you think, Andrew, that the one of the old kind of I suppose I don't use excuse, but kind of might be excuse, is trotted out is about the fact that the motor insurance market in the UK has only made X amount of years of profit in about 20 years, which is one that does get trotted out quite a lot.
Well, yeah, and whilst it's very risky territory to talk about this, for all that they might be seeing substantially lower claims on their auto book, they're bleeding terribly in other parts of it. From business interruption insurance and these big global composites have got interest usually across all these product lines. Even something as banal as wedding insurance. Think of the exposure some of the insurers will have around that, whilst at the same time they may be doing better on their motor book, travel, business interruption, all those areas those are the product lines they'll be hemorrhaging on terribly and in deep crisis management at the minute. But it is fair to say that why should the motorists support those other lines of business? Mm-hmm. But economics will come into play and have their own part to say.
There are also some very large incumbents in this country that only write motor insurance, and so
indeed
that sort of argument does disappear when you look at these standalone insurers who will be paying massive dividends on the basis of the suffering of millions of people.
And I do hear this line trotted out very frequently about how motor insurers hasn't made money in the last 20 years, and then I look at the share prices of the leading motor insurers in the UK, who, as Freddie said, predominantly do motor, and yet they still make a lot of money and a lot of profits. And I think you can't just look at the pure underwriting performance, because the way the insurers are set up is to not make a profit on that piece, so that they can give headlines like "we don't make any profits on insurance," but all the profit is being made in motor, and it supports those businesses. So there's definitely going to be large amounts of profit coming from COVID sitting on those motor insurance books.
So James, can I ask, in terms of Buy Miles, I mean, how as a business are you doing at a time when people are doing less miles?
So it's been quite interesting for us, because we have obviously been talking about how people that drive less should pay less for a long time, and I think what's happened over the last couple of weeks is people have really started to see the value of that message and the value proposition that we're offering, and it's really started to click with customers. So we're seeing a lot more customers coming to us now. We've said that we will waive our cancellation fees for customers who join us because they're leaving a car insurer who won't give them a refund, and they stay with us for 3 months, and then if they start to find that they drive more after that, then they can leave us again if they want to. So we're trying to make it easy for people to join us and sign up, and we've seen quite a positive response. Also, our existing customers are also extremely happy that they chose By Miles right now because they're obviously paying less and driving less.
Freddie, what are your customers and what's happening with Cuvva at the moment?
We've seen we've done a bit of research on what people are using Cuvva for at the moment, and they're using it for trips to collect groceries. They're using it for urgent medical trips, and they're using it to get to their daily exercise. But what we have seen is lots of people being displaced into family units that they don't necessarily live in permanently, and that family unit may have a different car that they're not regularly insured to drive. What we've been doing with the business is focusing on the use cases and pivoting directly towards solving COVID-related business use cases. So we've shipped our 50% discount for NHS workers, and we're about to ship a food bank finder inside the app so that you can find the nearest food bank to donate to. And we've got an entire team who's now dedicated to finding these types of use cases and shipping features within the product to support them.
So, Andrew, you've already mentioned about the fact that your carrot policyholders are staying put in the main. I mean, are you quite optimistic about the business going forward? And do you think that this whole situation has been kind of alluded to by both Freddie and also by James, that there could actually be some real long-term impact here on how people buy motor insurance in the future?
I think that's undeniable. We can see this, the business-to-business part of our business, where we work with insurers to help them launch, connected insurance products. We are seeing a lot of inbound appetite for more flexible forms of insurance that are metered effectively by technology, where the distribution premium across the year is not equal in 12 equal instalments, and it is more akin to the pay-as-you-use type of model that I think Cuvva and By Miles have pioneered brilliantly, and I'm regularly referring to both those businesses as benchmarks of how to do this stuff well. And having had the benefit of a dinner with James, what impressed me hugely was the absolute unswerving focus on doing what's right for the customer. And I think insurtech businesses, disruptors, have led the industry in that respect, and it takes a while for the incumbents to cotton on, and I think they will. There's no doubt. You've only got to read, whether you're picking up articles published by Forbes or you guys at Post or anywhere really, all of the commentary is saying, is this the tipping point for a more flexible form of insurance? Is this the moment that telematics becomes mainstream? And I certainly think that it will. What the customer needs is a broader range of products available that better suit their needs. And for some people, an all-you-can-eat, unlimited mileage, 20,000, 50,000 mile a year policy will suit their requirements perfectly, and they'll still be able to buy that. But there has to be an array of products available to them across the market that suits their requirement. And for too long, the 12-month standard vanilla motor policy has been all they can really buy. So I think we will absolutely see a change. We are starting to see from the data that we have access to in our own book in Carrot, we're certainly seeing that people are starting to put, when they're coming through to us to buy a new policy, there's been a steady decline in the amount of annual mileage that they're suggesting they're going to be driving. And I don't think that's them trying to kid the premium down. I think it's a genuine reflection of people starting to use their cars less and other means of transport more. We've done what we can to help in this situation. We have a number of key workers, critical workers, NHS workers on our books who are actually driving more than they have in the past because they're travelling further afield to do the brilliant work that they're doing. And I said to our guys last week, let's look at all of them. Let's look at the ones whose attritional rate on their mileage allowance has gone up over the past few weeks, and let's give them, 2,000 free miles in recognition of the brilliant work they're doing. And it's only because we have visibility and access to that kind of insight and that kind of data that we're able to make sensible and smart business decisions. The other insurers that don't have that access are shooting blind. And for me, this equation, doing the right thing by the customer, isn't just about artificial intelligence. You've got to overlay some emotional intelligence on top of that, and act in a way that you would want to receive that level of service as a customer yourself. And this isn't about a balance sheet at the minute. This is about, protecting your customer, doing the right thing by them, and enhancing your reputation a bit at the same time is a great byproduct, but shouldn't be the reason that you're doing it in the first place.
James, would you agree that, as Andrew said there, this could be the tipping point, in terms of, we will start to see, less people buying an annual motor insurance policy?
I think we'd obviously like to see that, and I think this is certainly the biggest event in car insurance that we've seen in a long time. So I think it will fundamentally force people to reevaluate whether they own a car or not, and as Andrew said, whether they want to have a 12-month policy or not, or whether they want to be able to play flexibly. So we think that this, and obviously we're right in the middle of the crisis now, but as we start to reach the end of it, we think this will be a tipping point in terms of how people think about the product and what they expect from their car insurance provider.
I think that I think that at the end of the day, the incumbents are always going to be led by their shareholder requirements rather than the customer. They're just set up; they're built that way. I think that's the fundamental secret sauce of a challenger brand like Cuvva, is that we're actually built around the customer, and it's not something that incumbent insurers really know how to do.
On that slightly not positive but positive note, I'd like to say a big thank you to my guests today, to Freddy, to James, and to Andrew. Thank you very much, guys. Just to remind you that we'll have more of these COVID casts coming up in the upcoming weeks, so stay tuned and stay safe. Goodbye from me. Cheerio.